All right, welcome back. You are listening to The Mark Moss Show. We're talking about the decentralized revolution each and every week, of course, talking about the way the world is changing. And we look at it through the lens of politics, finance, and technology. Of course, the decentralized technology is what's changing the world. Of course, that is Bitcoin. And we are witnessing all three of these things converging, clashing. I say it with a smile on my face, not because I enjoy the pain that's being inflicted or the more pain that will unfortunately come for most people. I say it just because it is interesting. We've been waiting for this to happen for a long time. It's finally happening, and it gives me a lot of stuff to talk about. Now, like I said, if you're not prepared, if you're on the wrong side of this, it could be drastic for you, but you still got time. You still got time. Now, I like to say, I like to quote Ayn Rand. She says that you can choose to ignore reality, but you can't ignore the consequences of reality. And so I think about that. This is the reality. I like to also say that we don't invest in the markets as we want them to be, as we wish they would be, as we think they should be, but rather as they are. So we want to pay attention to this. Now, as we're witnessing the world break down, we were just talking about in a previous segment, the Bank of England, one of the largest central banks in the developed world, is breaking right now. They've put in some backstop measures that most likely won't work for a very long period of time at least. And so we're witnessing this happening. Now, as this is happening, Bitcoin appears to be kind of holding up. Now, why is that? Now, we know that Bitcoin was created in 2008 at the 2008 Great Financial Crash. We have not witnessed Bitcoin go through a bear market. It was really created at the bottom of the bear market of the last cycle. And so we don't really know what's going to happen. We don't have a historical context or historical lens from that. But we do know it was created specifically for this. As a matter of fact, the first line of code by Satoshi Nakamoto said that the chancellor is on the brink of a second bailout. So he was basically putting the message that banks are going to keep bailing themselves out. They're going to keep printing more money. As they continue to print more money, your money loses its purchasing power, which of course is what inflation is. And so it was created for this, and here we are witnessing it kind of, I'd like to say coming to an end, but we don't know how many more tricks these central bankers have up their sleeves. Safdine Ammous, he wrote the book, The Bitcoin Standard, which I highly recommend. If you haven't read that book, The Bitcoin Standard, you certainly should. I love the book because it really goes through a full history of what money is, all the different forms of money, how they're used, why they're important. It goes through the history of the gold standard. And then it goes into a new, better way, which would be a Bitcoin standard. And so a great book. It's a big book, highly worth reading. But he said that the only way for Bitcoin to be defeated would be for central banks to become fiscally responsible. So pain causes innovation. We typically only move when we're in enough pain. Now, I believe in chiropractic. I've been going to chiropractors most of my life. I believe in it. I understand that your spine, all your nerves of your body come to your spine, and you want to keep your spine in perfect alignment to keep your body in harmony. I believe in it. But as much as I believe in it, I typically only go when I'm in pain, right? And the more pain I'm in, the more motivated I'm to go. And so that's just unfortunately how we are as humans. We need some sort of a pain, typically greed or pain. So we'll be motivated by greed, but usually pain. So solutions start coming to problems. When we have problems, we start looking for solutions to those problems. Now, we have a problem with what we use as money today because the central bankers continually manipulate it and continually cause boom and bust cycles. And that's probably one thing we can just count on. We can count on humans controlling money will always manipulate it. We can just count on that. It's human nature. And so the only way that so that's a problem. It's a massive problem. Now, if you're in the United States and you go to the bar tonight, you're going to have a $15 cocktail. It's not really bothering you that much. But if you're about 4 billion people in the world today living under double and triple digit inflation, it's a big deal. It's ruining your life. We're going to talk about that in a minute. And so you need a solution for this. Now, there's some solutions that are available, and that's why we're seeing it in these other areas of the world first. But again, back to the quote by Safdine, the only way for Bitcoin to be defeated is if central banks become fiscally responsible, which we don't count on happening because of human nature. Now, since the Bank of England has been breaking, they've agreed to bail out their financial system, bail out the pension funds. We've seen Bitcoin go up. Meanwhile, everything else is going down. It's pretty interesting. Now, one of the most famous, maybe one of the most successful investors in the world today is Stanley Druckenmiller. He actually worked under George Soros and helped organize the trade where they broke the Bank of England in a single day, made $1 billion. The way that he invests is really always been following the liquidity of the system. So he's watching central bank policy, and when they increase the money supply or when they decrease the money supply, he knows what to do with his money. Now, he came out a few years ago and said he's a fan of Bitcoin. As a matter of fact, he's buying Bitcoin. The most successful investors, one of the most successful investors in the world, studying under George Soros, he said that he's buying Bitcoin because he understands, because he studies, right? His whole investing strategy has been following what central banks do. He understands what they're doing, and he understands there's a need for something like Bitcoin. He came out this week, and he said that he thinks that crypto could enjoy a quote-unquote renaissance as trust in banks fades, is what he said. He said, as the global economy extends its suffering, is what he said. So he hinted at a renaissance for the crypto space if public trust fades in central banks. Well, is it fading? Well, they've clearly lost control. The Federal Reserve of the United States has two mandates: full employment and stable prices. We're certainly nowhere near stable prices. We haven't had anything remotely close to stable prices for at least the last couple of years. So they're obviously failing at that. They're trying to regain credibility. This is their words. Jerome Powell said they are going to keep at it until it is done. So they're going to keep at whatever they're doing, which is raising rates, to regain credibility. They want to show the world that they have control of the money system, but they don't. Nobody believes it. And on top of it, we're witnessing them failing left and right. Now, the Central Bank of the United States, the Fed, would probably be the last one standing, in my opinion. We're watching the smaller ones go bust left and right. They're all scrambling right now. So public trust is fading. So he said there will be a renaissance if public trust fades. What's happening? He said that rate hikes from the Fed and worsening macroeconomic conditions have proven brutal to the industry. Yes, of course. So what we've seen is that because they've been raising rates, we've seen risk on assets. These are like tech stocks. These are cryptocurrencies. They've had a massive sell-off. There's no denying that. Bitcoin's down almost 70%. It's a big drawdown. But that's because Bitcoin is being traded like a risk-on asset. But Stanley Druckenmiller thinks that it could see a revival as this macro situation worsens, and it could actually shift from being a risk-on asset to a risk-off asset. And he's not the only one. As a matter of fact, Bloomberg Intelligence put out a report saying that they believe that by the end of 2022, Bitcoin will transform from a risk-on asset to a risk-off asset. What does that mean? Risk on is things that you buy when you're okay taking the risk. When there's tons of central bank liquidity going into the system, everything is going to go higher, then I'm going to go into the riskiest things because I'll get the best returns. So these are the tech stocks that don't make any money or don't make any profits, cryptocurrencies, etc. Risk off is when markets are crashing. I don't want to take any risk anymore. I better move my money into very safe things. So these are typically government bonds. These are gold, things like that. Those are risk off. So they think that Bitcoin, Bloomberg Intelligence thinks that Bitcoin will move from a risk on to a risk off because of what's happening. And Druckenmiller is saying the same thing. He says that he thinks the U.S. economy could suffer from a, quote, hard landing in the medium-term future. What's medium term? Probably the next 6 months. He didn't say that. I said that. Adding that he would be stunned if we don't have a recession in 2023. That's what he says. So he thinks that we're going to have a hard landing. A hard landing means a big crash. And he'd be stunned if it doesn't happen in 2023. Just taking a break for a second. You're listening to The Mark Moss Show if you're just tuning in. We're talking about the decentralized revolution, the way the world is changing when we look at it through politics, finance, and technology. Of course, the technology being Bitcoin, which we're talking about right now. So Stanley Druckenmiller, one of the greatest investors in the world today, says that he thinks that the U.S. is going to have a hard landing in the medium term. He said he'll be stunned if it doesn't happen by next year. He said the U.S. was in, quote, deep trouble. And he shared an ominous warning that said, quote, something really bad could happen. His words. Something really bad could happen due to the worsening state of the economy. Now, like I said, this guy has an amazing track record in playing market cycles. And he said that there's actually probably a silver lining for Bitcoin. Again, he said there's a renaissance if people start to lose trust in central banks. What we're seeing is that if you have your money in the banks, it could disappear. Now, again, it works in the places where the pain is the highest. Now, in the United States, the pain is the lowest. It's the lowest. And most likely the pain will come to us in the United States last. But do you want to make the mistake and lose everything, or would you rather learn from other people's mistakes so you don't have to? Now, I would prefer to learn from other people's mistakes, which I try and do. So what mistakes are we seeing? Well, in Lebanon, people are literally breaking into the banks. They're literally doing bank heists to get their own money out because they can't get it. In the UK, we're not talking about Lebanon. We're talking about in the UK, the bond investors, the pensions, the retirees just potentially lost all their money, but the central bank just stepped in to bail them out. How long can they keep doing that for? The answer is not very long. But this can't happen here, Mark. No way. We're the United States. Sure. We're the United States, we're the reserve currency of the world. We have the FDIC insurance, right? It'll back up those bank statements. It will. It certainly will. I believe. Now, there's a chance it won't. FDIC insurance doesn't have enough insurance to cover the bank deposits. It would take a Congress to act and give them the amount of money they would need. And even if Congress did do that, they'd have to go print $80 trillion. But what would happen if they did that? Well, that would devalue the currency massively. So even if they did give you your dollars back, they would only buy you a fraction of what they would buy today. So it makes sense. I might want to have some assets that are outside this system. And that's exactly what he's talking about. Druckenmiller's argument is that the asset class could see a bounce, not because of the Fed flipping from hawkish to dovish. So right now the Fed is hawkish, right? They're going to crush inflation. We're going to crush demand. They're very hawkish. They're very harsh. Moving to dovish means they're light, they're friendly. They're going to now ease system. They're going to pump money back in. So he said that we could see the asset class bounce, not because the Fed flipping from hawkish to dovish, but because people may lose trust in central banks like the Fed altogether. And I think that's exactly what's happening. Now, there's other bullish tailwinds behind Bitcoin as well. As a matter of fact, the CFTC chairman, Benram, said this week that he thinks the, quote, Bitcoin price could double. CFTC chairman. What did he say exactly? Now, if you know what the CFTC is, it's the Commodities Futures Trading Commission. It's the regulatory body in the United States that regulates commodities. Commodities are typically real things. These are wheat, it's oil, it's gas, it's uranium, silver, right? That's commodities. Securities are equities. Securities are Tesla stock or Apple stock or Microsoft stock. So securities and commodities. The commodities arm, the CFTC is the regulatory body of the United States. And they are, Bitcoin has been kind of up for debate. They've been squabbling over who's going to control Bitcoin. A lot of people say, well, wait till the government regulates it. Well, I'm like, the government already regulates it. As a matter of fact, the CFTC already regulates it. As a matter of fact, the SEC regulates it. The IRS regulates it. FinCEN regulates it, and on and on and on. But the CFTC and the SEC have been fighting over who is going to be the regulator of the crypto industry. And basically where we're at today, Gary Gensler, who's the head of the SEC, has basically come out and said, he hasn't written it down in black and white on paper, but he's basically said it verbally that anything other than Bitcoin is a security. And they had originally kind of said maybe Ethereum is not a security, but now that Ethereum just went through this merge, he says that now it's probably a security. So don't get mad at me. Don't shoot the messenger. That's Gary Gensler, head of the SEC, said that. So it looks like Bitcoin might be the only one that is actually a commodity and it is regulated by the CFTC. So the chairman, Rostin Benram, said this week on Wednesday, he said, quote, growth might occur if we have a well-regulated space. He told there was a fireside chat at New York University School of Law. He said, quote, Bitcoin might double in price if there's a CFTC regulated market, end quote. So He's saying that, look, if we could just get some clarity here, right? If we get the SEC out of the way, let's clearly define everything else as securities. Let's make Bitcoin a commodity. We'll take it over. If we can give it a regulated market, we think the price of Bitcoin could double. Well, I think Bitcoin could do way more than double, but that's his words. He went on to say, so there's a bill. So a bipartisan bill introduced by the leaders of the Senate Agriculture Committee, which oversees the CFTC, would crown the CFTC the primary regulator for the crypto industry, expanding the agency's authority to oversee crypto spot markets and require crypto trading firms to register with the CFTC. So there's this new bill. They're hoping that it goes through. If it goes through, it gives them clarity. If it gives them clarity, then they'll have the ability to oversee the regulations, which, again, back to his words, saying that if we get clear regulations, then we think the price of Bitcoin could double. Now, look, I'm just going to say a disclaimer. I'm not for any of this. I believe that I live in America. I was born in a free country, land of the free, right? We don't ask for permission in the United States. Everything is free because we live in a free country. Now, they make laws making things illegal. So if there's a law specifically saying that something's illegal, then it's illegal, right? So I'm not saying that we should go break the law. The laws are there. We have to honor those laws, or we pay the consequence for those. The point that I'm making is that we don't ask for permission to do things. If there's a law, then we know there's a law. If there's not a law, then it's free. We're free to do that. It's what my father went to war for. It's what my grandfather went to war for. It's what all our forefathers went to war for. So for them to say that, things would probably be better if we made some regulations around it, I just have a hard time believing that. I don't support that. Now, the problem is, I guess some of these, Wall Street firms, they're afraid to act because they're afraid if they do something that then later one of these regulatory bodies could come and change their laws retroactively, and they could get in trouble and have to pay fines or whatever, which is a problem. That's pretty stupid that you could have a regulatory body come in and make laws that aren't there and then retroactively put them in place. Kind of highlights how screwed up this whole system that we have here. Now, I get it. Like I said, if there's laws, you got to respect those laws. But if there's no laws, then we should be free to do that. So the fact that we need a new regulation to give clarity so that it allows people to make a move that they could then push the price higher, it's pretty messed up. But that's the world that we live in. It's his words, not mine. Stanley Druckenmiller thinks the price could go up as central banks lose credibility, which they are. CFTC says if this bill goes through and gives clarity, we could see the price of Bitcoin double. Bloomberg Intelligence says that Bitcoin could move from risk on to risk off asset. Are you starting to see the light at the end of the tunnel? I just got back. I was in Mexico for about 6 days. I went and spoke at a conference down in Mexico City called Nomad Capitalist. There's about 500 people there at the conference, and they were all there to learn about international diversification, we'll call it that. So these 500 people went to Mexico City to attend this conference, which I was a speaker there, to learn about international diversification. What does that mean? Well, what is diversification? So that means instead of putting all your money into one stock, that'd be pretty foolish, you would diversify. So instead of putting it all in one stock, I'd spread my money around. I'd put a little bit into real estate, a little bit into gold, a little bit into stocks, a little bit into Bitcoin, and not just one stock. I'd put it into multiple stocks in multiple sectors, right? So that's diversification. So international diversification is kind of the same thing, which is like I wouldn't put all my money in one stock. Why would I have my whole life in one country? Now, again, if you're in the United States, maybe you don't see this. If you're in another country, you probably see the need for this more and more. Remember, we move off of pain. And so these people came to learn about this international diversification. We're learning about all these problems, all these laws, all these things, all these financial situations that are going on, why you might want to diversify internationally. That means, getting different residencies, different passports, setting up different corporations in other countries, buying properties or investing into other countries, things like that. And so these 500 people were pretty tuned in to what's going on. Obviously, they're paying attention, and that's why they're there. They see the signs, and they realize they should probably start making plans for this. But then, I was just thinking about the other people at the hotel. Then my wife and I, we took off from Mexico City, flew out to the beach at Puerto Vallarta, hung out for a couple of days there, just hanging out at the beach, hanging around the pool in the hotel, resort, etc. And I'm just looking at all the people there and just thinking, these people have no idea what's about to happen. And then I think, they have no idea what's going to happen and doesn't matter. Like, we're in this town of Puerto Vallarta. We're 30, 40 minutes away from the airport. It's kind of like a little pueblo, like a little village there. They have no idea. They're just living their lives. But what if this entire financial system melts down? Does it affect them? Well, a lot of times in third world countries like this, like Mexico, Central America, El Salvador, Nicaragua, et cetera, they don't have bank accounts. They don't have their money in the bank, so they don't really have to worry about that way. But if they did have money in the bank, that would certainly affect them in a big way. If they obviously had stocks and bonds and whatnot, that would certainly affect them in a big way. But they don't, not there. But their lifestyle would change. They'd certainly have way less tourism. And they live off tourism. So all these people that they were expecting to come there wouldn't be. So just look back in March of 2020 or most of 2020, really, during the pandemic. People in Mexico were like literally starving to death because there was no tourism. So without any economy, without any tourism, what do? I was involved in a ministry down in another town, Puerto Escondido, and I was sending money down there, and they were buying food, and they had like this food ministry where they were delivering packets of food out to all these different people because they had no way to eat. So even if you're not paying attention to what's going on, and even if you don't have your money in the bank, and even if you don't have your stocks or whatever, you're still going to be affected by what's going on. So again, back to the Ayn Rand quote, you can choose to ignore reality, but you cannot ignore the consequences of reality. So I like to pay attention. I like to watch the signs. Now, one thing that you want to think about is one of the biggest revolutions in the world is obviously Bitcoin. But one of the features of it is that for the first time in history, or we'll go back, one of the oldest problems in history is how do I protect my wealth, my assets, my value in a way that won't be stolen? So if we're the first few people in the world, you're going to try and come steal my chickens or my goats. So we make a tribe, and we make a village, we make a kingdom, we make a country to protect our private property. But Bitcoin solved that. For the first time in history, now I can have my $100, $1,000, $1 million, $1 billion, whatever I have, and I can just store it cryptographically. And it doesn't cost me any more time, effort, energy to secure $1 than it does $1 billion. And no one could take it from me. Now, that's if I custody it myself, if I take custody. Now, to these pensioners in the UK right now that are losing all their money as a system, well, the UK is bailing them out right now. Maybe it'll work, maybe it won't. But all their money, all their value, all their wealth is in somebody else's pocket, in the government's pocket. And there's a chance they don't get it back. That's called counterparty risk. And so one of the best ways to do that is to pull this out. Now let's go back to America. Let's put it here. Let's put it right here at home. Gold had been money for 5,000 years. Through the 1800s, the United States was blowing up. People were farming, and we had agriculture growing. People were making so much money. New towns were being developed. The wealth that was being created was unimaginable. But that was all in gold. They stored it in gold. But what do you do with all this gold? Now, if you got $100 worth of gold, it's easy, right? You put it under your mattress. If you have $1 million of gold, you got to do something else with it. You can't just go bury it in the yard. And so they put it into banks. By 1933, everyone had just put their gold in the banks, and the banks gave them IOUs or claims saying that they were owed the gold. In 1933, the government shut all the banks down for a week. When they opened the banks back up a week later, it was illegal to own gold. You couldn't get your gold out of the bank anymore. Your gold was taken from you. Now, if you didn't have your gold in the banks, and instead you had your gold buried in your backyard, guess what? You didn't get your gold stolen from you. Or let's say you didn't have gold at all. Let's say that you owned land and you had like 100,000 head of cattle and you had a business or whatever. Well, then they stole the gold, but I didn't have my gold in there. So that's what we're talking about. You have your pension in their bond market. You have your stocks and your equities there. You have your money in their bank accounts. If this system goes down like it has many times before, 1971, 1940, or 1933, you're going to be affected. But if you don't, if you have your money out of that, like Bitcoin, put it into cold storage, you're probably going to be doing a lot better off. You lose that counterparty risk. So I'm obviously a fan of Bitcoin. I think it's the future. I think if you don't have at least a 2 to 3%, maybe up to a 5% allocation to it, it's pretty irresponsible in today's day and age. I'm not saying take all your money and go buy it. I'm definitely not saying, as a matter of fact, I'm saying not to do that. Don't do that. But what I am saying is you add up all your investable assets. And your investable assets are everything but your house and your business. So take up all your stock accounts, your 401ks, et cetera. Add that all up. Is it $1,000? Okay, it's $100,000, whatever it is. Take 1% or 2% of that and just put it into Bitcoin. Not 100%, not 50%, but 1 or 2%. And then when you buy it, take it off the exchange and hold it in your own custody. Bitcoin is a bearer asset, meaning if I have it, and nobody else has it. Now, if we need any more, confidence into what's happening in the future, it's all around us. Now, remember I was talking about how really pain causes action. Like my chiropractic story. I believe in chiropractic, but I typically don't go until I'm in pain. And so when you're, in downtown New York in Manhattan and you're at the bar ordering $15 martinis, you probably don't have a super high pain. But if you're in Mexico, depending on tourism, or you're in sub-Saharan Africa, you might have a whole different set of pain. And that's why the areas of the world that have this pain are the areas that are adopting it first. And as a matter of fact, this new report came out that shows just how fast it's happening there. And you're not going to believe it. So I want to cover that in a minute when I come back. You're listening to The Mark Moss Show. We're talking about the decentralized revolution, talking about the way the world is changing through the lens of politics, finance, and technology. And I want to cover that. I want to talk about where the pain point is the highest, what the numbers are of it moving through. I also want to talk about, forget the price for a minute. There's two things that you should be watching, and neither one of those are the price. I'm going to talk about both of those as well. And, we were talking about how if you're in New York City, downtown Manhattan, and you're at the bar having your $15 martini, you probably don't see the need for it. But if you're in, if you're one of 4 billion people in the world living under an authoritarian regime, dealing with double or triple digit inflation, you got a need. You have a need. You need a solution for it. If you're in North Korea and you're not allowed to have any money, and without money there's no freedom, you have a need. And so in North Korea, they have this, in every area of the world there's capitalism. Capitalism being taking my personal private property and trying to do free trade and use my scarce resources more efficiently. That's what capitalism is. And capitalism is always and everywhere present. Even in the most communist areas, people are still freely trading amongst themselves. It's called black markets. Even in preschools, kids are trading sandwiches for chips or for stickers. It's called free markets. Even in prison, there's capitalism. People are taking their scarce resources and trading it freely. Capitalism is not cronyism. People think, oh, capitalism failed. Look at the United States. Capitalism has failed. Well, the United States is nowhere near capitalism. As a matter of fact, we're 70%, or 70% not, 70% communism. In Karl Marx's book titled The Communist Manifesto, he lays out 10 points of communism. 10 points that you must have in order to have a communist society. The United States has 7 of those 10. That's a quantitative metric. 7 of the 10 are here. It's not freely traded. Corporations using the government to put regulations in place to protect themselves and create these moats, that's not capitalism. Capitalism is free and voluntary exchange. Say, oh, capitalism led to slavery. Well, capitalism is free and voluntary exchange. It protects private property rights. Does slavery protect private property rights? Is slavery free and voluntary? So it's not capitalism. You can call it that if you want, but that's not what it is. All right. And a shameless plug. If you've never read the Communist Manifesto, save yourself the brain cells. I wrote a rebuttal to that. It's called The Communist Manifesto. You can find it on Amazon. It went live in August. And check it out. Uncommunist Manifesto. Leave me a review. I'd love to hear it. All right, now back to where the pain is the highest. And again, this is in these areas where the pain is the highest. And so what we see is that crypto is quietly thriving in sub-Saharan Africa. per a Chainalysis report. Report shows strong crypto usage and adoption rates in the region with highly educated young people and low job prospects. Crypto is a, quote, a way to feed their families. That sounds weird. I thought it was just for criminals. I thought it was only for criminals that want to do criminal things. I thought it was just for financial speculators. Well, in America, it is because it's not for criminals, but it's for speculating in the U.S. because we don't have the pain. But in sub-Saharan Africa, we are. It says the region, sub-Saharan Africa, crypto adoption usage has the world's highest proportion of crypto retail payments of less than $1,000. It has 80% of the world's proportion of crypto payments of under $1,000. That means it's being used for real things. The report highlights how peer-to-peer transactions are more common in sub-Saharan Africa than anywhere else in the world. 6% of all crypto transaction volume is happening in Africa. It says it dwarfs those of Central and Southern Asia, and Oceania, the region with the second highest volumes in that category. Many Africans have integrated crypto into everyday life, the report says. Crypto usage is driven by everyday necessity so it's driven by everyday necessity, not by speculation by the already well-off. It's especially in countries where the values of local fiat currencies are dropping, as we've seen in Nigeria and Kenya. So again, if you're in Nigeria or Kenya where the value of your currency is dropping so fast, you're losing 60, 70, 80% of the value of your currency, you're going to go to something else. At least you better. You're going to go to crypto. You're going to go to Bitcoin. But Bitcoin's too volatile. Well, it's too volatile, I would agree. It's much more volatile than the United States US dollar currency. But what about if you're in Nigeria or Kenya? Is it more volatile than those currencies? Is it at risk of getting seized like what's happening in Lebanon? The answer is no. You're going to take your chance. It says here, we don't have big institutional level traders in sub-Saharan Africa. It's the people driving the market here, and they're all retail. Nigeria has a ton of highly educated young graduates with high unemployment rates and no jobs available. So it's not just stupid, ignorant, dumb people being taken advantage of. It's not just rich speculators trying to make money. No. Highly educated young graduates with high unemployment rates and no jobs available. Crypto to them is a rescue. It's a way to feed their family, the report says. It's growing. Now, it grows where the need is the biggest, just like other technologies do. So the internet was a technology that swept across the world. It's changed the world. It's brought more equality to the world than anything in the world. If you have a smartphone, which most of the world does now, you're pretty equal. You can learn anything you want in the world with a smartphone on Google or YouTube. You can meet anybody in the world that you want on social media. You can pretty much do any business that you want in the world from a smartphone. If you're allowed to join the financial network. Now, half the world isn't allowed to join the global financial system. Why? Because they're not able to. They don't have permission. They don't have permission to join. It's a big deal. Now, Jack Dorsey, who you might know that name. He was the founder, the CEO of Twitter until recently he stepped down. Jack Dorsey, you don't have to, you obviously I'm sure know who he is. He's not only the founder of Twitter, but also Block, which is Square, and Cash App, one of the largest digital payment providers in the world. He left Twitter to focus the rest of his life on building Bitcoin. That's what he said. Those are his words. He created a new company called TBD. It's a Bitcoin-focused subsidiary of Jack Dorsey's Block, which is SQ. It's teaming up with now Circle Internet Finance, which is issuer of a stablecoin, a USDC. Now, a stablecoin is like a digital dollar, and it's helping to bring cross-border dollar-linked stablecoin transfers and savings to investors globally. Block is a payments firm that runs Cash App, and it's hemmed by Twitter co-founder, like I said, Jack Dorsey. Now, people that live in countries with rapidly depreciating currencies, such as Argentina, and Turkey, and of course sub-Saharan Africa like we were talking about, they have moved into crypto to protect their savings from devaluation, and specifically US dollar-linked stablecoins. They've become a popular alternative for savings and remittances. Remittances are sending currency back and forth. And US dollar is the reserve currency today, and we think Bitcoin might be the reserve currency of tomorrow. I would agree. However, stablecoins are the bridge in between the two, says Emily Chu, TBD's chief operating officer, told CoinDesk. And so again, Argentina, Turkey, sub-Saharan Africa, this is where it's growing. Now, eventually, it's going to come to England when the Bank of England finally capitulates and breaks, and it's going to come to the United States as well. You have the chance to get in before everybody else, if you can see the signs, which I'm trying to report to you each and every week. You're listening to The Mark Moss Show, talking about the decentralized revolution. You have a chance to front run this with the information I'm giving you. I hope that you take it, and that's what I got. Thanks for listening. Since you've stayed to the end, I know you like this video, which means you're probably going to really like this video right here and this video right here.